Good morning, everyone. Today, I will briefly introduce Post Malaysia Berhad and discuss the challenges it faced during the COVID-19 pandemic. Post Malaysia Berhad is Malaysian national postal and parcel service provider with more than 200 years of history. The company operates in postal service, courier and parcel delivery, logistics, retail service, and aviation service. Over the years, Post Malaysia has evolved into an integrated logistics and e-commerce service provider to meet changing market demands. During the COVID-19 pandemic, Post Malaysia faced several challenges. Financially, the company experienced rising operating costs due to health and safety measures, while disruption in logistic operation affected business performance. Operationally, movement restriction and the rapid increase in parcel volume placed pressure on manpower and logistic resources. In addition, the company faced intense competition from other courier service providers, making it more difficult to maintain profitability and market share. Therefore, this report analyzed the impact of COVID-19 on Post Malaysia's financial and operational performance, as well as the strategies implemented to overcome these challenges and improve their future business resilience.
Next, I will present the financial analysis of Post Malaysia Berhad from 2020 to 2024. First, under income statement analysis, Post Malaysia experienced a continuous decline in revenue. Revenue decreased from RM2.33 billion in 2020 to RM1.85 billion in 2024. This decline was mainly due to the use of traditional mail services and intense competition from private courier companies. For gross profit, the company recorded fluctuation throughout the 5-year period. Gross profit dropped significantly in 2021 because of higher operating costs during the pandemic, but gradually recovered afterward. However, the 2024 gross profit was still lower than the 2020 level, showing that cost efficiency has not fully returned. Looking at net profit, Post Malaysia recorded a loss every year from 2020 to 2024. Although losses improved in 2022 and 2023, the company remained unprofitable and loss increased again in 2024 to RM201.55 million. Next, for the balance sheet analysis, total asset declined from RM3.17 billion in 2020 to RM2.00 billion in 2024, indicating a reduction in the company's resources and growth capacity. Although total liability decreased over the period, liability remained much higher than the equity. In 2024, liability were more than 5 times the company equity, which reflect a high level of financial risk. In terms of equity, shareholder equity fell sharply about 74%, mainly due to the continued loss that reduced retained earnings. This weakened company financial strength and may reduce investor confidence. In conclusion, Post Malaysia managed to reduce its liability, but the consistent decline in asset and equity showed that the company continues to face significant financial challenges and needs further improvement to strengthen its financial position. Thank you.
This slide presents the financial ratio analysis of Post Malaysia Berhad from 2020 to 2024. The current ratio decreased from 0.94 to 0.62, indicating a weakening liquidity position and a reduced ability to meet short-term obligations. The debt to equity ratio increased significantly from 1.77 to 5.73, showing that the company became more dependent on debt financing and faced higher financial risk. In addition, the return on equity remained negative throughout the 5 years, indicating continuous losses and poor returns to the shareholders. Although the gross profit margin recovered after 2021 and remained relatively stable, it was insufficient to offset the company's overall losses. Overall, Post Malaysia experienced declining liquidity, increasing financial risk and weak profitability during the study period.
Hi, Assalamualaikum, and I will discuss about company responses and strategies. It focused on Malaysian Postal Group, which is Post Malaysia Berhad, to counter the impact of the COVID-19 pandemic by implemented strategies including cost optimization, digital transformation, service diversification, and strength financial management to address and challenges of declining profits, rising operational costs, logistic disruptions, and fierce industry competition. First, cost optimization and operational restructure, which is climbed sharply during COVID-19 pandemic. Digital transformation and expansion of e-commerce logistics to seize opportunities in e-commerce logistics. Third, business diversification strategy, which does step beyond the boundaries of traditional postal services. Next, financial management and debt reduction, which prudent control and debt reduction between 2020 and 2024. Last but not least, overall evaluation of company resources, which Post Malaysia Berhad should continue to enhance profit and long-term financial standing. Thank you. Hi, Assalamualaikum. I will discuss about recommendations. There is 3 recommendations that would Post Malaysia Berhad can improve, which is the first one is financial management strategies. They can improve cash reserve and liquidity management policies, improve their debt management and capital structure optimization, refinancing and restructuring of existing debt. Next, Post Malaysia Berhad can improve, which is operational improvement. By operational diversification, change post offices to service and financial hubs, faster digital transformation. Last but not least, Post Malaysia Berhad can improve strategic planning for long-term stability by developing its strategic planning process and help it develop a sustainable business model, roll out of strategic foresight through regular simulations, and by enter partnerships and joint ventures. Thank you.
In conclusion, both Malaysia Berhad faces the significant challenges during and after the COVID-19 pandemic. The company experiences declining liquidity, increasing financial leverage, and continuous net losses, mainly due to national operating costs, intense competition, and the structural decline of traditional services. Also, e-commerce activities increased customer demand. The benefits were insufficient to fully offset the financial and operational pressures faced by the company. Therefore, both Malaysia must focus on strengthening its liquidity position, improve operational efficiency, and investing in technology and logistics capabilities to enhance long-term sustainability and resilience against future challenges. That's all from our group. Thank you.